this computer. All right, happy MLK Day. It is the 18th of January in the year of our Lord 2021. I've got on my old t-shirt. I did take a shower this morning. That's about all I've done as I rolled out of bed and realized that we have a very short trading day ahead of us, but I did want to, I didn't know if we wanted to get together today or not. So, Dimitri, good to see you. Hope you're having a great day. And there is old Matt Jolly Wally. Jolly, how's it going? You tell me the situation. You at work today? What's the status?
The government lets people take the day off.
Oh, so they let you take today off?
Yep.
Look at you. I'm proud of you. So, what are you doing on your day off? Just goofing around, trading a little bit?
Well, no, I can't trade futures at the moment because I didn't get approved by TD Ameritrade.
All right, let's talk about that. So you're going to get approved, though. What are they making you do? And are they making you take a little course, little quiz, or something like that?
Yeah, I'm actually about a quarter of the way through their options course.
Okay.
And then I'm also taking the options course on Tasty Works.
Yep.
Their platform. So,
I'm trying to remember what I told them when I started trading because they wanted to know how much experience you had, and I just told them, man, hey, I am the stuff, and I wasn't the stuff, but I told them I was.
And that's where I goofed.
Yeah, you goofed. You told them you were not the stuff.
Yeah.
Yeah. Okay. Good. But I'm proud of you. Matt. I am really proud of you, though. I think you're making great strides. I'm really proud of your progress. You're doing good. Hey, there's Dwayne coming on in. Hey, Dwayne.
Hey, how are you guys today?
Oh, I am fat and sassy. Just rolled out of bed not long ago. Took me a little shower. Still got my old t-shirt on. Life is good. Rick is in here. Hey, Rick. Hope you're having a good day.
Not Doing fine so far.
Good. Not a lot to do. Listen, guys, I want to make sure we go through a couple of things. We did have someone to cancel that was really never seemed to participate in any of our sessions, and I hate that. And they said that this style of trading, just wasn't their style. And so, and I will say this: it's not for everybody. What we do is not for everybody. Seems like the biggest thing that people are doing today is the wheel trade, right? Everybody and their mama's talking about the wheel. Well, that's because of the market environment that we're in, and a lot of people have never ever traded through a crash or a flash crash or, August the 24th and 25th of, what year was that was so hard on me? 2018, March and February of 2020. And so everybody is staying at home now, and everybody's got their computer, and everybody and their mama is a trader today, right? So they look for the latest, greatest trade out there, and a lot of people are saying it is the wheel, okay? Now, I love the wheel myself, and you may not realize it, but we have been trading the wheel in our account. When I sell these puts on things like Microsoft and DraftKings, that's really what we're doing. But some of us rarely, if ever, get assigned because we keep defending the position. So you're probably not going to see my short put get assigned in DraftKings because I'm probably going to defend that. And there's several ways that I can do that. If I want assignment, I'll take assignment. No big deal. But what we're doing is variations, and you should have a lot of arrows in your quiver, okay? Don't be I used to want to be a one-trick pony. I wanted to do one thing and do it well. And it's, you just need to be equipped with a myriad of different strategies for what the market is giving you at the moment, okay? So I've been looking at the market, and I've been wanting to get light on my trades. I've been wanting to kind of pare down a little bit. Let's get this inauguration over. We got the armed militia, National Guard at every capital of the United States. People crazy right now. They're nuts. And, that can shake markets. And so I'm just a little light on my positions now. Do have negative delta, positive theta, and negative Vega, but remember we cut that Vega in half. So there's a lot of different things that we could do in our portfolio. And what I'm trying to help you guys with is to not go through the same learning process that I went through, because I lost a lot of money doing this trade, doing all kinds of trades, until I finally figured out, oh, you kind of have to adapt here and there to what the market is giving you, and you have to adapt your portfolio and manage it by the Greeks. And when I learned that, it was like a light bulb went off. And let me show you something. I want to just show y'all. So I want to get you excited about something. Can everybody see my screen okay? I'm using it. I'm trying to use it. Remember, Melanie didn't want me to show my account number. So I want y'all to still be able to see my balance. But I'm trying to hold the account number, not from y'all, but if someone were to see it, you know, on YouTube or something, we don't want them, you know, running away with my information. So I got nothing to hide. But I wanted to show y'all an account, if I can find it here, that I did back during 2016, I guess. Give me a second. And this was I paper traded strategies. Let me see if I can find it. Hey, y'all get out of here. Daddy's in a class, for the love of God. What is wrong with y'all? Beth?
She locked me out.
Hold on, y'all. My kid's going nuts. Let me see if I can pull this
No,
up.
she is.
All right, let me see my drive here. Show you guys a thing or two. Thank you, Beth.
Me out.
Buddy, you don't mess with Beth when she comes in the room. Let's see. Google Drive. Let me see what all I got on my Google Drive.
I did not hurt you.
Daddy's going to beat some arse if y'all don't. Yeah, okay, here we go. All right, I want to show you this. Now, y'all, this was a paper traded account. Hey, Drew, Semper Fi, buddy. Good to see you. Let's see if we can open it here. But I did this in 2016, I believe. And this was back when I was really studying Karen, the super trader, and what she did. Oh, my God, don't tell me I'm having trouble with this today. Come on, give me my... But I wanted to show you that what I did that entire year, I started off, I think, on April the 6th. I traded this little strategy where I combined Tasty Trade with Karen, the super trader. Here we go. All right, opened up for you. And I just want to show you what I did. Now, y'all, this is paper trading, and this will show you how far my spreadsheet has come. All right, because this is, let's see how I did this. It's still loading. All right. So what I would do is I would go in and I would say, I'm going to sell stuff about 45 days out, right? And I would sell strangles. And then I would keep the delta to Vega. I keep delta to about half of what Vega was. But the weird thing is that you don't see that anywhere on here. But I just want you to kind of look as I scroll through this spreadsheet of all the wins compared to the losses, all right? So you see I do ratio strangles. That might mean I'd sell 2 puts and I'd only do 1 call, right, to get the Greeks in order. There's a strangle. I did a few straddles, but I want you to see the green over here. Again, this was a paper traded strategy, but I want you to see how successful this thing was. Look at this. Man, I mean, I was on fire, baby. Look at this. Are some of the fields unrealistic? Is there some slippage that you'd have if you were doing this in a normal account? Yeah. But man, that's where I first found out, Bobby, you are on to something. And let me just show you the net lick. I started with, I think, $150,000 in this fake account, right, on April 4th of 2016. Let's see, it should give you a nice little profit and loss thing here. It's working. Here it goes. So you see that account started out at $150,000, and it kind of just, you know, went nowhere for a while. But, buddy, when I started ramping that puppy up, look at that, and went over, here's where it eventually ended. I kind of got tired of it at the end of the year. You know, paper trading's not the same as live trading, but that one went from $150,000, and it ended on December the 6th at $222,000. So what is that? That's $72,000 on an account doing exactly what you and I are doing pretty much here. Now, when I was doing this, I was solely trading, let's see, what was I trading? I was trading ES, SPY. You saw I had a rut in there, but it was mostly just SPY, ES, and I think I did some SPX in there. So I was basically concentrating on the S&P 500, okay? But even back in 2016, and you can see how my spreadsheet has evolved. Can you imagine? I only had 3 pages back in 2016. Isn't that crazy? So I'd buy some puts as insurance. You know, there you see closed after 85 days. It's a little bit, but what I wanted to do is to show you that I've been testing this stuff for a long time. All right. So this isn't our first year. Maybe our first year together, but it's not our first year. Now, I don't want to be your daddy. I don't want to be your granddaddy or your mama popping you on the hands and things of this nature. But here is the deal. If you buy into what I'm telling you, and you don't have to, trust me, then you really need to use the tools that I've given you. And that is the spreadsheet. You've got to, I don't care if you have 1 position in your account or you've got 2 positions in your account. I want you, if you're going to trade with me, please make this a daily part of what you're doing. Because I'm afraid that what's happening is a lot of you are just watching. You're just watching what I'm doing and going, I'm not sure about that. I'm not sure about that. Why does Tom Sosnoff not record his trades? Why does he not keep up with the stats? Well, Tom, he's just a gunslinger, y'all. I mean, you call in a trade, 9 times out of 10, he's going to make it. You and I, we are much more selective. You know, this account's got $44,000 in it, and that's not a ton of money, but it's no little amount either, right? I got to protect this. I mean, this is, you know, if you've got 4,000 in your account, 1,000 in your account, you got to protect that. I mean, that's important. And this is not a game. This is not you and me just getting together and telling a few jokes and laughing it up. I mean, we like to have fun. I'm going to have fun if I'm going to do it. But guys, you have got to take this serious. This is your business. This is going to be your livelihood. You do not want to go and sit in the bathroom at your office and trade every day. You guys at some point want to be, you know, sitting on the beach or milking a goat or milking a chicken or doing whatever that you like to do and trading on your phone. And that's what I'm trying to show you. But an important part of that is this spreadsheet. If you don't utilize it, you're going to get nothing out of this, and you need to cancel your subscription to our room, because what I'm telling you is not going to work for you. But I'm trying to show you something that's going to work. I believe it. Can I lose money? Yes. Can I have a losing year? Yes. It is very, very possible. But as you see, we are cautious on the trades that we make. We use the probabilities, we put them in our favor, we manage the risk, and we rinse and repeat. That is what we do. Is it boring? It ain't to me. Now, it may be to you, but man, I love this stuff. And I hope you love it too, because what we've got here is a methodology for pulling out profits each and every day. Today ain't the 16th, it's the 18th. So if you're not using your spreadsheet, use it. If you've already had a one-on-one consultation with me and you're still not using it, then let's get back together again. I am here because I love teaching and I want you guys to be successful. I really do. I mean, it would kill me to know that you guys are out there just winging it. You will not be winging it. I mean, I want you to bring the discussion into our room. Let's talk about these things. Let's evaluate. Y'all, we got time every day. We get together at least an hour every day, every trading day. Let's talk them out. I mean, y'all, I want y'all to be a part of this. It's not just me rambling and rattling. If y'all got a question, you got to give it to me. And there's no guarantee that I'm going to know the answer. Mike wanted to talk about margin. I don't know a lot about margin. All I know is I don't trade in a cash account. I don't trade in, I've always traded in a margin account. A lot of people doing the wheel do cash secured puts. That's fine. I don't necessarily look to see if I've got enough cash to cover assignment, because I rarely get assigned. I don't think I've ever been assigned. in a stock. I mean, I like to roll and defend. And who was it? Let's see. Dimitri. Dimitri put on a strangle in the micros the other day based on the spreadsheet. And his first thought was, and Dimitri, this is great. Your first thought was, Bobby, how do I defend it if something goes wrong, right? What do I do? Hey, that's exactly what I'm going to show you, because that's the wonderful thing. If you're doing spreads and you've got a small account, I understand you got to do spreads, but you've seen that you have to go closer to the money than you do if you can go bare naked, right? That's why I finally said, as Karen the super trader said, she said, you know, I was doing these iron condors, I was legging in on either side, and she said one day I was like, hey, I can go out farther and make more money and have more options if I go naked. And that's why I do them. Now, I've got a friend, y'all. He's got, and I hope he never listens and hears me, but dude's got over $1 million in his trading account. And he is scared to death to sell a naked option in the micro E-minis with $800 of buying power used in $1 million account. He's scared to death. He said, I can't hardly sleep at night. And I remember how I was the first time I hit that button. I was jack scared to death. But what I'm trying to show you is our little spreadsheet keeps us from being over allocated. Okay? I don't care if you got 2,000, you got 10,000 or $1 million in your account. We strive to keep it safe. Not saying you won't lose, not saying that your account can't go down, but we strive to keep you safe, because God knows I don't want you to lose your money. So let's go in and let's see how our little net lick is doing for the day. Let me move this up where y'all can see. Let me see if y'all can see it. Can y'all see my net lick now? I moved it up. Yes or no? I know Matt will tell me. Matt, can you see it?
Yes, we see it.
Okay, y'all see it. Thank you, Rick. So 44, 480, 18. And the reason, I mean, there's not anything hardly that's going on that's causing my net lick to go up other than the bonds, because that's the only future that I got, and the stocks aren't trading today, right? So I'm up $31 on the bonds. So we got 44, 480, 18. But I like recording it anyway. 44, 480.18. All right, y'all, that ought to get us a good dose of the Jeffersons. Do I have the Jeffersons lined up? Yeah. Because I should be up a little bit. And some of y'all might be too young for the Jeffersons, but that was the best TV show. Oh, my gosh.
Well, we're moving on now to the east side, to a deluxe apartment in the sky.
Oh, I love that show. Oh, I loved it. Anyway, here we go. So I'm up $27.39. So I'm up 2.11%. And y'all say, well, Bobby, those guys in Wall Street Bets, man, they killing you. Yeah, the ones that post are, right? The ones that actually hit a lottery ticket and the thing went up, man, they're doing great. But do you realize how many of those people are losing on their butts and are not posting that? So we have gone from 43,560 up to 44, 480.18. We up $919. If the Lord blesses this week, we're going to be up over $1,000 by the time this week is up. Now, we could go down, but I'm optimistic, very optimistic. All right? So I want you to record yours as well. You be recording your net lick. You put yours down into your spreadsheet. Make it yours. Change what you don't want to change. That's fine. All right, let's see how we're doing in our Greeks. Remember, you're only filling in the 4 blue columns. The rest of it takes care of itself. So we go back to our spreadsheet, and I'll minimize this. Make sure you've got beta weighting checked, right? Let me move my little thing up a little bit so y'all can see at the top. All right, make sure you got, this is the monitor tab, beta weighting to the SPY. So I'm negative 815 in my deltas. Negative 815. Am I going to get a green? Am I going to get a green? Oh, I ain't after my theta yet, sorry. You think I know how this works by now? Theta, 43.66, baby. I like it. 43.66 of pure sweet theta. And I'm hoping I get a dark green over here. Well, I didn't get a dark green, right? But I'm right at the lower level. So you want your theta to be between 0.10% of your net lick and 1% of your net lick. So I'm at 0.10, so I'm right at the bottom, right? But I'm okay. I've got good theta, so I don't have to get any more theta. Now Vega, y'all, when you do go through a market crash, you'll realize why Vega is the killer. But look at there, it's down even a little more than it was. 192.51. Let's record that. Negative 192.51. All right. See what we got. How much buying power are we using? Remember, the buying power usage is up here. If VIX is between 20 and 30, which it is now, then we're going to use no more than 35%. And I'm going to be super duper good here. Y'all, I am cautiously going into this week. Look at this, 87.1644. So we go 87.16.44. And we're only using 19.6% of our entire account to have these trades on. Y'all, things are looking good. And most importantly, I go over to the right. My theta is in an appropriate level, and my deltas are in an appropriate level because it says no adjustment. Basically, I am delta neutral with a slightly bearish bent. Now, keep in mind, guys, let's go back to this, and I want to talk about it. My account is up 2.11% for the year. Is the market up or down for the year? Does anybody know? What's the S&P 500 done? What's the E-minis done? Well, let's look at it. Let's see. What have we done? Here we go. Let's pull it up. Let's look at this little chart, if it works correctly. Here we go. So these are the E-minis, right? And this is the day. Let me make sure I got it on day. Yeah, day. October, November, December. Here's 2021, where it starts. So it's still kind of going upward, isn't it? I mean, it was down that day, up, 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 up. So it looks like it's a little up for the thing. And this entire year, y'all, what have I had? I've had negative deltas in the account. Do y'all see how powerful that is? I've had a bearish bias to my account. The market continues to go up, and I've made money. Matter of fact, I've made more than the S&P 500 is made. Just keep that in mind when you're going through this. Now, the next thing we do is we go and look if we've got any problem children. Well, there's not really any problem children today because Snap's not trading, VIX, Microsoft, DraftKings, those aren't trading, right? The stonks, as they call them in Wall Street bets that always go up, they're not trading, so we're not getting any activity on those. So the only thing that we're really making money on, let's see here, is ZB, right? ZB is up 15%. I got a nice $62 profit there and made $31.25 per day. I already went while we were playing Elton John tunes and kind of put it into the Tastyworks platform because I just wanted you to see where I'm positioned on the ZB. Look at this little graph, y'all. Is this pretty or what? Let's see if I can zone this in just a little bit. Help if I'll do that. Here we go. Look how pretty that is, y'all. This is a big old green where the price of this, here's my short put at 163. Here's my short call at 174. And look at price right in there, around 169. This is the video game that we play, y'all, when we're selling strangles and naked options. We're trying to keep the flag. This is the Alabama football team right here. Let me use my little drawing tool since I paid $25 for the drawing tool. This is the University of Alabama right here. And this is the goal line. Goal line here, goal line here. So here's what the job is. We don't want the University of Alabama. We want them to stay right here on the 50-yard line all dang game. Now, if you remember a couple years ago when we beat LSU in the national championship game, they barely got past the 50-yard line. I think they got past the 50-yard line one time. The Alabama defense held them. So we want to hold Alabama, which you could never hold Alabama at the 50-yard line for an entire game. But we want them to stay right here. And if price goes too far this way, we're going to start losing money. So our little money, let me draw a money sign. Our little money sign will be down, baby. Okay, got a negative money. If the price goes this way too far, then this option will start losing money, right? We don't like that. So here's the game we play. What happens? And let's see, was it who said that about the? Dang it! Hold on, I'm losing my train of thought. But I want to go back and make sure I got here. Dimitri was asking, how does he defend his short strangle? Well, here's what you do, Dimitri. Okay, so you've got. Let's pretend this is anything. I mean, it could be the micro E-minis, the E-minis, SPY, doesn't matter. And you've got a shorter call and your shorter put. So the game is to keep little Mr. Football Team here in the middle. All right, let's change my color to more of a crimson color. That makes me feel better. All right, so what happens? Let's pretend that the stock moves against you and goes this way. Goes right up here. Okay? So this option starts losing money. Loser. But this one starts making money because, see what I'm saying? This one's making money. So this one that you sold for maybe $1 or something, maybe it's only worth 10 cents now. So what you do is you close this puppy, close him out. All right, he's gone. And take the profits on that one, and what do? Then you move that strike up. We're going to move him, and you're going to put another trade on closer to the money here. All right? That's your first level of defense. Now, what happens if price keeps on going, right, this way? Keeps on going. Well, then this one becomes profitable. So what do you do with it? Well, you're going to close him out again, right? And then you're going to take your profits on him, and you're going to move him closer to the money. And now all of a sudden you get down and we're down to 21 days. Crap, look, the price of the stock is here. Man, it's already at my call. So what do you do now? All right, here's what you do. You're going to now take this call and you're going to roll it out in time. You're going to give yourself more time. So say these options now down at 21 days to expiration. So basically you're going to close this out, close this entire thing out. Let me draw my X for you. You're going to go, you're going to take your gain on that one. Man, you're going to take your loss on that one. And let's say it took you, I mean, I'm just making up, but let's say it take you $3 to close that one, okay? So it cost you $3 to close it. So what you're going to do is roll this out to a farther dated expiration. So maybe you're now in the, where this is in the 21 day, right? So maybe you're rolling out to, I don't know, 28 days. Or maybe you're going to roll out to 35 days. But you're going to roll out to a point that you are now going to collect more than the $3 that it cost to close that one. Everybody with me? Took me $3 to close it. So now we're going to close it here, and we're going to buy or sell an option further out in time, maybe at the 174 strike. You may have to move it out to the 175. You may have to move it. But you're going to collect, let's say you collect $3.25. You have defended that trade, y'all. So you took that $3 you lost and you brought in more extrinsic value. That's all we're going to do. What are you going to do with this one? Well, you're going to roll him out in time too. You're going to get another collection on him as well. You could roll it out as one trade. You can, you can move this up this way. Maybe you just have to do it in a way that makes smart sense. And look at it on an analysis tab. Look at it on the analyze tab on Thinkorswim. I like using this in Tastyworks because it just makes things so clear that you can see what's going on. But the game is to keep the flag between our two shorts, right? And that's all it is. I mean, you're playing Fortnite or you're playing Candy Crush or whatever the soup du jour, the game du jour is of the moment. This is the game that you and I play every single day. And you're saying, well, Bobby, I can't roll out for a credit. I bet you can. Most of the time you can, especially if you're selling puts. Now, if you'll notice, when we sell options, what am I mostly selling? Am I mostly selling strangles? Or am I mostly selling puts? Or am I mostly selling calls? Most of the time, you'll notice in the micros and in the stocks, I'm selling puts. Why? Well, number one, they're juicy. We get a lot of premium on the puts, right? I like selling puts. Number two, we have a VIX hedge. Hold on a minute, y'all. Let me yell at my kids. Hey, guys, turn the game down. It's distracting to Daddy. Thank you. All right. So we've got the VIX hedge that protects us with a downward motion in the stocks, right? So I'm much more comfortable selling puts than I am calls. All right. And to me, they're just easier to defend. They're easier to defend. So when you and I are the University of Alabama or your favorite football team, we not only play offense, and that's what we're doing when we sell an option. Oh my gosh, my handwriting's atrocious. Let me get here. We don't only play offense, right? How you spell offense? Offense, right? But we play defense. Now, we don't like to play defense, right? We would much rather play offense, sell our options, and just have the money come in. Ching, 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 baby. Come on. But no, we have to play defense. Heck, we even play special teams, right? Thank God Alabama finally got a kicker, but he's going pro this year. Dang it. He didn't miss a single field goal or a single extra point all single year, y'all. Not in the first game. So
He's not going pro. He's only a sophomore.
I thought he said he was going pro. He was entering the thing. He's not going pro.
Pretty sure he's just a sophomore.
Okay. Maybe
Last year was his freshman year, but he hurt himself last year.
Okay, well, y'all keep in mind how much medications I take, so I can't tell you what I'm reading or not, whether it's correct. So thanks for correcting me on that. I really want him to come back because dude did good, right? But you and I play special teams. Jolly, we're playing special teams because we got the VIX hedge. Maybe you could call that defense, but let's call that special teams. So now, y'all, look at what we're building. We've got an offense where we sell. We are sellers of premium. Now, some of y'all saying, well, Bobby, I'm going to shoot for the stars and I'm going to start buying options. Well, y'all in the wrong place. I barely ever do that. Occasionally I might, but we are sellers, y'all. We are sellers. And then if it goes against us, we got the defense. I just showed you how we're going to defend our trades that go against us, right? We got special teams with the VIX hedge. Speaking of the VIX hedge, tomorrow will be the next day that we'll actually sell or buy calls in VIX. It'll be, today is 120 days. Let's see that so you can see that. If anybody's got a question about the VIX hedge, tomorrow is the day you're going to want to join us because let's put in VIX. Remember, we do it when it gets down to 120 days. Here we go. So you see I've got, oh crap, man, I'm fixing to take a full loss on that little puppy. Look, I got 1 day left on it. Then I've got some in the 29 expirations. I got them in the 57. I got them in the 92s. And today is the 120th day. It is time to put on another VIX hedge, and we will do that tomorrow. So if you've got any questions about special teams on our little football team that we have together, we'll be playing special teams tomorrow. Okay? So this is what we do. Then on top of that, not only do we play the odds, y'all, but we actually do this goofy voodoo magic where we draw levels that help us with market direction, right? So let's look at our friend ES today, the E-mini, since the future is the only thing trading, and let's see where we're at. I always like to look at volume profile first. This is where the most volume has traded over the last, is that red line right there? Over the last 10 days, this is where volume has traded. So we're a little lower than that. The value area high is here, which is a standard deviation above. Standard deviation below is here, right? So we're kind of in the middle here. Wouldn't surprise me at all to see a progression back up to that little the dominant line where the most volume is traded, right? Wouldn't surprise me at all. Wouldn't surprise me if we saw it bump up here, but at the same time, it wouldn't surprise me to see it bump down here. Kind of got a range, don't we? We got a nice little range of price, a little tight. Okay, so let's take all that off, and let's look at the big green monster. Here is the area that we draw our little butt of fair value, right? This is where we believe fair value is for the price. So what are we now? Well, this would be an area that is overbought. Get back up there, dang it. Overbought, right? And this is a period that is oversold for the fair value area up here. There we go. So right now, price is in an oversold condition, which confirms my suspicion that we very well may see a progression back here on volume profile and back here into this fair value area. Okay? Then what do? Well, we confirm that by looking at another chart, and we go and we look at our little trading view chart because it's got our nice little chart that's got our, this is ES, right? It's got, this is the daily chart, and then we put on there a linear regression channel. You got any questions on how to do that? It's easy. Just go to the indicators, type in linear regression. It'll be the first one. And we see price doing what? Bumping to the top of the linear regression, to the bottom, to the middle, to the bottom, to the middle. Hanging in the middle, baby. It is hanging in the middle. But notice, what is it doing? We are clearly in an upward trend on ES, which kind of further gives me thoughts that, hey, maybe the market is going up. Now, again, this is just our forecast, guys. And how many times do y'all get peed off at the weatherman for missing the rain? You know, they say, oh, it's going to be a dry day, and then the next thing it rains. I mean, forecasts are forecasts, and they're only as good as they are in time right now. I mean, this is the picture that we have of the market. No guarantees at all that the market's going to go up, right? But we are just hanging out, lightly treading to a point that we're barely using any of our buying power. We could be up to 35%, but we're only using 19%. We could be all the way up to 1% on our theta, but we're only using 0.1% of our theta. I mean, so we're just very, very, very conservative right now. But we're fixing to turn it up. And what I want you guys to do is this. Let's bring our Zoom over, because if you have not, then you've got to do your homework, okay? And you're like, man, Bobby, I thought we were going to be all fun. Oh, did I close my Discord? I thought we were going to be all fun and games. Well, yeah, we like fun and games, but again, this is your business. This is my business. And we treat this stuff with respect. So I want you to go into Discord, if I can ever get it back open. And I want you to go into the resources tab. And I want you to study and listen to everything that I have posted, right? Now, you may not have time before tomorrow. Let's see, there's a one called, where's it at here? Trade input, resources. Here we go. Resources. Here's what I want you to do. I posted this one for Matt the other day. Matt, you listen to this, right? The ultimate trading strategy.
I did.
Yeah.
Yes.
It's pretty good, right? It's about chasing shiny objects. And what the options community right now is chasing is they're chasing the wheel. Everybody's chasing the wheel right now. Oh man, the wheel is the best strategy on the planet. No, it's not the best strategy on the planet. It's a good strategy, and it's one that we will employ. Okay? It's one that I am employing. Right now, I'm utilizing it. So watch this. Listen to this podcast here. It'll tell you about chasing shiny new things, right? You don't chase something shiny and new just because you go, man, that Bobby, he's just boring. It's all garbage, man. I mean, what is this stuff? Drawing big green monsters and all that. I got to find something flashier, right? Well, you find you something flashier. Find something that's probably doubling what the S&P is doing so far this year. I think that's pretty doggone flashy. Then I want you to watch this one from Option Alpha, where it says market direction becomes meaningless when you ladder options trades, because that's what you and I are about to do. That is what we're about. We're about to start laddering, baby. And this is a very important thing for you to watch. Then, let's see, Dimitri, if you've got questions on defending trades, watch this one. I even told you where the good stuff begins. I want you to watch Mike at 14 minutes and 25 seconds into this and go through 20:45. I want you to just hear what he says. And he was like, wow, you mean to tell me that you can just roll down and out forever on an option and still be collecting premium? Yeah. He said, man, if you're doing this, this is the greatest strategy ever. And it's kind of cool to hear Mike come to that realization that, wow, what a wonderful way to defend options. Then I want you to check this one out. This is why we trade every day, y'all. We trade every day. Why? Well, why trade often? I want you to see this, because executing a high number of occurrences will significantly impact your success. All right? Then, this is going to take you a little bit of reading. It's a 6-part series, but it is a must read. I want you to read all 6 of those, and especially the back testing results of this particular strategy that rolls into everything else that we're doing. Okay? Then I want you to listen to this, the probability of a turnaround, which has got me changing a little bit about the way that I'm now trading or adjusting my losers, because before I would let a loser go to a 2x loss, right? So that means that if I sold a put for $1, I would close it for a loss at $3, which means I would take a $2 loss. Let me say that again. If I sold an option for $1 and I had to pay $3 back to close it because the market went against my put, then that ended, because I took in 1 and I paid out 3, that means I lost 2. 3 minus 1 is 2. So that was a 2x loser. That was my traditional style of managing losers. But they did a study, Tasty Trade did, where they found that if you sold a strangle and the strangle was down 50% as a loss, right? You're down 50%, then you had less than a 50% chance of that coming back to be a profit. And that kind of clicked in my head, and I said, hey, that means that maybe I should start managing my losers at 50%. So that's one of the things that I'm experimenting with now. And so far, I'd say so good. Then I want you to look at this. This is an interview that Option Alpha did with Cameron Skinner. He earns, on average, 22%, and he does something very, very boring. You know what he does? He wakes up, goes to his computer, he sells a put in SPX, and he closes a put in SPX. And he does that every day. He opens one at 60 days out. He closes one at 30 days out. That's all he does. Then he goes and twiddles his thumbs and does whatever he wants to do for the rest of his day. He sells a put, he closes a put. So that's all he's doing. He's opening them at 60 or closest to 60 days out, and he's managing it 30 days. So what is he doing? Is he laddering his trades in? That's exactly what he's doing. And I've already showed you the podcast that you need to listen to on market direction is irrelevant if you're laddering in trades. And that's exactly what he's doing. Then, when you got some time riding in your car or something, put this one on. This is Trading in the Zone by Mark Douglas. The entire audio book is on YouTube, and you can listen to it there. There's also several other recordings of Mark Douglas on YouTube. Consume them all, baby. Mark Douglas is no longer with us. He has passed on the pearly gates over Chili Jordan's tide, but he left us with a lot of wisdom, y'all, talking about taking the next trade. Just take the next trade, put the odds in your favor, and don't worry about it. He talks a lot about the psychology of trading, right? The psychology of getting this down. So there you have it. Homework for you all, because if you're in this room with us on a daily basis, I can only do so much for you. But your trading destiny is in your hands. It is not in my hands, okay? I'm just showing you a path that has been successful for me. But I need you to make sure that you are utilizing the tools. And first and foremost, if you say, Bobby, this spreadsheet, man, it ain't gonna do it for me, then I can't help you. I really can't, because this is where I think you'll find that I'm so much different than anyone else, right? Tom and Tony, they don't track their trades. I do, and I think it's important. If you're not doing anything else, you don't have to enter your trades anywhere else on here. You don't have to do anything. But please, monitor your Greeks. Gosh, they're important, okay? If you just monitor your deltas and your thetas, you're going to be fine. Notice I rarely talk about this. Ideal ratio 0.2 or above. That should say negative 0.2 or above. So I'm good there, right? I don't talk about that. I don't talk about delta to vega. That says that should be 0.5. Well, I'm 0.04, right? So I need to be shorter than I am. Delta to theta, I don't talk about that. I mean, I don't even watch these, but I put them on there because Tasty Trade did research, and I thought, well, that's kind of cool. So I just built them in to my spreadsheet. But you notice I look at two columns. I'm looking at F. How's my theta? That's really, really important. And then I'm looking at the final column out here, Q, which tells me, do I need a delta adjustment? It says no adjustment, so I'm pretty much flat. And the spreadsheet does all the work for you. Now, my little spreadsheet today says, hey, Bobby, you actually need to sell premium. Now, keep in mind, I got to fix this bug because if you don't sell anything, it automatically says day complete. But I know I hadn't sold a thing. So this week, look here, I have not done anything, right? I hadn't done a thing. So we go to my action tab. What does my action tab do? Well, it says, do I need to adjust my buying power? No, your buying power is fine, Bobby. You're under 35%. Will you be selling premium today? Yes. And this is what I built for Beth, right? What will she be doing? If she's not looking at Snapchat, she doesn't have time for all that. All she's going to be doing is trading the micros. And so if she's selling 345 today, she knows that she needs to get about $115 when she sells first time, $115 when she sells second time, and $115 when she sells the third time. Now, what I know that you don't know is that I'm going to be selling back into gold this week. Remember how much money I bring in when I sell gold? I bring in almost, $1,200 on a gold trade. So, man, I could jump start myself all the way up to Thursday by just selling gold. But I'm not going to sell it today. I'm waiting just a little bit. But I feel like I need to sell something. Remember, that's part of my thing. Why do we sell every day? Every day. Now, if you got a $1,000 account and you sell one option and it gets your week done, you can't sell every day. But if you are required to sell $1,724 in premium, you got to get that done some way, somehow. So what would I do? Well, it says, hey, Beth. Well, it doesn't say, hey, Beth, but it says, what do? You go out to the 60-day expiration, the ones that are expiring on the 20th of March, and you need to sell, if you're going to sell both sides, sell you a 15% probability of being in the money put and a 15% probability call. Now, why does it say that? Because it takes in implied volatility to tell her how close she should sell to the money. So based on the current volatility in the market, it says she can go to 15%. Well, let's see what we do if we do that. All right. Now, remember, we've done our analysis already, right? We feel like market may be going up toward this way, but we got a tight little range here. But it could certainly just fall off the face of the planet, right? But I feel like I need to collect a little premium. So let's go in here to my trade tab. Let's go to the micros. And it says that I need a 15 delta at 60 days out. How does the spreadsheet know that there's a expiration at 60 days out? Because they communicate together. My spreadsheet communicates with Thinkorswim. If you don't have a Thinkorswim account, set you up a paper account, baby, and it'll pull in the same information, all right? And that way you can still trade on Tastyworks if you want to. Well, let's look at it on Tastyworks. Let's put in /MES. All right, let's go to the table. All right, here we go. So we're in the micro ES. It says go to the 60s. Let's look at it. It says go to the 15% probability of being in the money. Let's see if we can find 15%. Go on down, go on down, go on down, go on down. There we go. So you're talking about selling the 3310 way away from the market, 60 days out. 3310. How come it? There it is. There it is. Then you go on the call side, and let's find 15% of being in the money. 15%. Here we go. That's going to be right here. And that would be, click on the 1675, right? So, let's look at the trade. This particular trade has a 69% probability of being profitable, right? Making 1 penny. It's going to bring 258 in extrinsic, gives you slightly positive deltas, gives you $1.26 of theta. Your maximum profit is $258, and $727 is going to be your buying power required. Let's just click on it there and just look at everything. Everything looks good. Now, here's the thing. You go, hey, wait a minute, Bobby. So I'm bringing in a credit of $253. Man, Bobby, that is more credit than my account says I need. What do? Guess what? It's a good news for you. Shut up! Daddy's on the class! Sorry about that. So, guess what you can do? You can sell something even safer than that. Look at this. You could go out and collect less money and be safer. What if you went out to a 10 delta? Right? About maybe right there. And let's move this out safer, right? Move it out safer to about a 10 delta right there. Now, let's see how that trade looks. That trade has a 75% probability of profit. Well, God, Bobby, why don't I just go out for a 90% probability of profit? Well, you always say a juggling act, right? Lord, I may change the strikes a little bit. Let's get the buying power 666 in the name of the Lord. But let's look at this one. So this one, you're bringing in less credit, right? After commissions and everything, you're bringing in $178. So you're bringing in less of a credit, and your buying power is only $670. So this is a trade that just about anybody could do. So why don't we go into Think or Swim, and I'm going to do a similar analysis. It says sell the 15. Now, I don't have to sell the 15. But let's go ahead and let's see what we got here if we do it. 15% probability of being in the money is about right there. See that? So we'll sell the 30. 32.90. And then you got to hold your control key down when you hit your second one. But if we go on the call side, we'll go over here to 15%, about right there. Right? Hold your control key down and hit that. So it brings in 51 credit. The natural price there. We'll try the mid. And let's see how much buying power it's going to take me. $737. Still makes me really, really safe, doesn't it? So let's send that and see if we get filled. I don't hear a ding. I don't hear a ding. Let's see. And, you know, I mean, it could be that things are a little bit light anyway. That's a wide spread, isn't it? Man. See if we can move it down some. Canceled it. Are we going to get a ding? Are we going to get a ding? Probably not. That's fine. You know what I'm going to do? I'm going to cancel my order. Now, a lot of times on a spread or something, because that was a strangle, right? I wonder what happens if we were to do the sides separately. Let's see. What if we sell the 15% all by itself? Wow, that's still a $3 wide spread, isn't it? So the nat is at 30, the mid's at 30.25. Let's see if we can just sell that one by itself. Bingo, baby! See, a lot of times because you're selling two options, a call and a put, you may not get filled as easy, but I've found really good liquidity in these things, right? So we sold that, and let's go sell the 15% probability call up here. Sell that puppy. Wow, that's the one that's got the big spread on it. Look at that. 2075. We'll never get to 2075. Let's try it though. Because how many times have we been surprised? That is amazing. Look at that. No way we'll get filled. But I'm greedy. I just want to try it. I'm trying it. I'm trying it. I'm trying it. All right, we'll take it down. Take it down to 20. May not get filled there, but I'm trying. I'm just inching it down. Doing my little price discovery. 20. Nope. Cancel, replace. Probably shouldn't be selling this today anyway, with it being a light trading day, but I'll see if I can get filled. Because trust me, I ain't going to do anything to put my account in jeopardy just to show y'all something. Trust me. Let's knock her down a little bit. Let's go to 1875. There we go. And filled at 1875. Now we got just a couple minutes, so why don't we go ahead and for those, let's say we had someone sign up that was new today. I don't know if they are in here now, but let's do this. Let's do copy. We'll copy that option. I want you to see me actually putting this in. So we sold the $32.90 at 60 days out, right? $32.90, 60 days out. All right, let's go up with our spreadsheet. Go to the macros tab and choose the macros. Johnny One Lot. We sold the $32.90 put. Option name, that's what I just copied, and I'm going to paste that there. Right? We'll paste that there so to keep up with it. We sold a short put. It recommends a delta of 15. You saw that. Just like the front page does. It takes implied volatility and makes that suggestion. And we sold that actual delta of 15. We're going to put it in at 60 days out. We entered this on the 18th. All right. And what price did we get filled at? Let's see. We got filled at, filled orders on the put. We got filled at 30.25. Now this is cool, y'all. Watch this. It automatically calculates everything for you. 30.25. It calculates the credit I received. Look at there. Isn't that sweet? And tells you, you know, the different management levels that you can manage that at. And importantly, it goes over here on the weekly premium. And watch this. Now, it shows, hey, baby, we brought in $150 today. And we've at 8.69% of our weekly premium to be sold. We've got to sell $1,574 more dollars in premium. But we ain't finished yet. So we brought in $149.78. Let's put in our next one. See if it makes a difference. MES. 1. And we sold the, I need to go grab it so it'll keep up with the price of it. We sold the, my kids have my phone. It's easier for me to find my orders there. So right click on this and copy. We sold the 4010. Good Lord, look at us. So 4010. So the 4010 call. And we'll right click on option name and paste what we just copied there. We'll call this one a short call. And we did that at the 15 delta at 60 days out. And if y'all get bored typing this stuff in, this never gets bored to me. Oh, I love putting in my trades and seeing my little spreadsheet telling me how good stuff I've done. All right, so what was the price we got on that one? We sold that one for $18.75. Humming, 1875.75. And we brought in how much premium? It'll calculate $92.28, baby. So we go to our weekly premium tab at the bottom. And now you can see we today have sold $242 worth of premium. We're at 14% of what we should do for the entire week. We've got to sell $1,482 for the remainder of the week. And looks like I still need $102 more premium to sell. So what could I do? I could go back in, sell another micro. If I'm bullish on it, I could sell a put. If I'm bearish, I could sell a call. If I need delta adjustment and I want more negative deltas, I could sell the call closer to the money than the put. I mean, you got all kinds of options that you can do. Just because it recommends a certain probability of being in the money doesn't mean you have to go that one specifically. You've got to make sure you're keeping your Greeks in line. Where is my
Hey,
Greek?
Bobby, can I
Yeah.
ask a question on
Yeah,
the
Rick.
action tab?
Mhm.
So is there ever a time, so I mean today you sold a call and a put. Is that because the action tab calls for that? Is there a time that you would only sell a call or a put, or it really doesn't matter as long as you sell your premium?
Yeah, you could go strictly with this. This thing is made to basically say put on a strangle every day, and you're laddering into them. If your account's big enough, you're laddering into them 3 times a day. If your account's smaller, you may only be doing it once a week. But yeah, Rick, you could do that and do the puts and calls. But what I'm actually looking at that's more important than the recommendation. Now, Beth, I just want her laddering, okay? Beth is not going to take the time to where she comes in and goes, I'm going to watch these Greeks, all right? She's just not going to do that. So I want her laddering into trades regardless. But for you and I, Rick, who are in this stuff every day and we're watching it, I mean, she's going to have 5 kids to raise if I'm not here, right? She didn't have time to do that. So what you and I are doing are taking it a little bit different direction. And we're saying, wait a minute, my negative deltas are here. I don't need a delta adjustment. Therefore, I can sell both the put and the call at the same probability of being in the money. So both at 15%. Now, what if this said my deltas were +8? Okay, what would I do? Well, I would want negative deltas. So I would probably then go in, Rick, and you're going to have to make this determination. I would probably go in and just sell the call.
Got it. Okay, so
Because
basically it depends on where your delta is,
depends on what your
whether
delta
you
is
sell
and your
call or
delta
put.
adjustment. And then, Rick,
Got
if
it.
you say, but I'd like to be on both sides of the market because I don't really like picking directions, then how about this? Sell the 5 delta put and the 15 recommended delta call. Do you see what that's doing? I want everybody to think about that. If you're selling the call closer to the money than the put, that's giving you what kind of deltas, negative or positive?
Let's go with positive.
It's giving you negative.
Let's go with negative.
Let's go with negative. There you go, Rick. Good job. Very good job. No, I mean, think about it. So, and you do have to stop and just think about these things. So, and that's good. I don't want y'all to ever be afraid of putting an answer out there. But let's think about it. Can I draw for you? Let's do that. I bought this thing. I got a whiteboard now. Let's see where it's at. Y'all like whiteboard or blackboard better?
I'm used to whiteboard better.
All right, let me get a whiteboard. All right, here we go. So let's say that this is the line of price. And let's say here's a stock that's $100. That'd be better if I draw with my actual pen, wouldn't it? Let's say here's the $100. And up here's 150, the price of the stock. And down here is 50. And you're on a continuum of this normal little distribution curve, right? That looks something like that. And you're going, okay, down here I'm going to sell my put, okay? And I'm going to sell a put way down here at a 5 delta. Let me do the little symbol for delta. All right? So you're selling your put here. All right, now, if you sell the 5 delta up here, if you sell the 5 delta up here, then this is what we call neutral. It's delta neutral, right? You've sold the same option percentage up here, 5 delta, 5 delta, which means what? That has a 5% probability of price that is now at 100 coming down and basically going beyond this and making this in the money. Same thing up here. Now, what if, let's erase this, and you say, hey, wait a minute, Bobby, I want to get negative deltas. So how about this? You now sell your call closer. Instead of here at the 5 delta, you come over here, man, you crazy, man. You just say, hey, I'm going to sell a 30 delta. Do you see how this is more of a bearish leaning deltas? Everybody with me? You sold a 30 here, right? And the 5 here. So you've basically said, now this thing is not delta neutral anymore. This is negative 30 deltas. And this is plus 5 deltas, basically. Because when you sell a put, right, that's a bullish trade. When you sell a call, that is a bearish trade. So now you've got a very bearish skewed trade. Because now here's where your little distribution is between your little call there and your little put here. So basically you could say, instead of delta neutral, with these, the 5s canceling out, you could say, well, this one is negative 30 plus 5 is negative 25 deltas. Approximately. But that's very important, y'all. You guys got to know this stuff. If you are closer to the money on this side, that's bearish, right? So if you were going to make this delta neutral, then you'd have to go, if I'm selling the 30 here, then I got to sell the 30 here. And that makes it delta neutral. This plus 30 deltas I'm getting here will balance out with the negative 30 deltas here, and it'll be 0 or neutral delta. Now here's the weird thing too, and I'll leave you guys with this. I know y'all got to be with your family and stuff for today, but let me get off of this. Yeah, clear all that out. Here's the weird thing too, that as the more you do this, the more you'll find out. Okay, say that I need negative deltas in my account, right? Say this thing says I need negative deltas and you're positive delta. When the market goes up, it automatically makes your deltas start going down. And it's the weirdest thing, because you'll go, now wait a minute, that's strange. I wanted negative deltas. But the market's going up against my positive deltas, and all of a sudden my deltas are going down. And then if you needed positive deltas, but the market starts going down, it's the reverse. And it's the strangest thing, because there's a lot of times that I would say, you know, if the market goes up, I probably need to sell a call. But the weird thing is, the more the market goes up, the more your deltas become negative. And then if you're going to bounce them out, you go, no, wait a minute, it's an up day, but I'm selling a put to make my deltas flatten out? Yeah. And you have not, probably most of you have not experienced that yet. But when you do, trust me, it's going to be weird, because you're going to go, that doesn't make sense. It doesn't make sense. You have to sit long and hard. It's one of those things when you're on the toilet and you're in some deep, deep thought, you know, and you hadn't got a Reader's Digest with you, and you start thinking about it, it'll kind of come to you. But it is the weirdest of all things. You go, I need negative deltas, but I'm positive deltas, and the market goes up. Now I've got negative deltas. Weird. But I don't want to confuse you on that. All right, any other questions? Let's see, there was one thing in chat. Let's see. Matt said, go and have to catch the end later. Y'all have a great day. So Matt bumped out on us. He's enjoying his day. All right, guys, any other questions at all? That's a very, very good question, though, Rick. Very good. Anything else? Going once, going twice. All right, y'all, I appreciate you so very much. Hope y'all have a wonderful rest of your day. Bye-bye.